Do you know the specific, easily identifiable pattern that signals a higher time frame trend changes just in the initial stage? You're going to learn that today in a current market and what it means for the months ahead. Hello, I'm Robert Miner with Dynamic Traders Group, and this is our weekly trading video where I teach you a specific trade strategy on a current market position. It's a brief version of the much more extensive videos we provide our DT Report subscribers every Wednesday and Saturday, plus updates. Because of the drama in the stock indexes the past week, I'm going to take a detailed look at the indexes and what it means and the specific trade setup to prepare for in the days and weeks ahead. So be sure to stick around to the end of the video where I'll tell you how to receive more free updates for the weeks ahead. And while you're watching, feel free to comment below about this video and what aspects of practical trade strategies you would like to learn more about. Okay, let's get started and take a detailed look at the stock indexes. This is the ES weekly data. You might want to take a look at last week's video if you haven't seen it. I talked about two potential wave counts in the S&P. One of them called for a new high, and we had the trigger for that, and that would have completed an ending diagonal. The other one would be signal that the high had already been completed, and we gave the specific signal for that. And that's the signal that got elected this past week. So it's a very serious position that the stock indexes are in right now. Let's take a look at this weekly data first. Two things here that's important to keep in mind. The weekly momentums are bearish, but haven't reached the oversold zone. At least the 8 hasn't, the 8 look back. And usually the weekly momentums get what we call dual look back oversold for at least 2 or 3 weeks before a bull reversal is made if the higher time frame trend is bearish. What that means is more than likely there's at least, we'll just say, another minimum week or two sideways to down before it completes a weekly low. And that's not hard to imagine given this past week. And we've got two significant time factors in 2 weeks. That's the week ending February 4th, and that's just a simple low to low to low, and it's a 100% alternate time projection of the last decline from September into October. So with those two in the week ending February 4th, we would be alert if the S&P as well as the other indexes were sideways to down into that week for a weekly low. So that's something to keep in mind. We'll go to the daily data here, and here's what's significant. In the introduction, I said, do you know what is a signal that indicates a higher time frame trend has reversed? It's certainly one of just breaking lows. That's an obvious one. It's a bull market. It should be making higher highs and higher lows. Well, it came down and dramatically took out the recent lows. So that's significant. But there's another position that the market's in right now that's even more significant for the months to come. And that is once a major reversal has been made, either a bull market top, a bear market low, or a completed correction, the pattern, the first section out of that, the pattern should be what we call impulsive. That's in Elliott wave terms, and that's just the first section out. That's the pattern that indicates a higher time frame trend is reversed. And here we are off of the January 4th high, and needless to say, the stock indexes, particularly the S&P here, is making a beautiful impulsive pattern. So when it makes its low, and that weekly low I was talking about, that's just the first section down. So a lot of amateur traders think, oh, I got to sell the top and buy the bottom, and that kind of nonsense. No, you have to recognize what is the higher time frame trend, and then you can develop a specific trade strategy. So folks, I want to tell you, this is just the very beginning of what is probably going to be a multi-month bear trend, potentially The S&P, as well as the other indexes, some of the others that made new highs, have made the high for the year. But at the very least, it's indicating a multi-month top has been made. So what about these next couple of weeks? Well, again, if this is an Elliott wave 1 and 2, an ideal position for wave 3 is just below last week's low, and that's the 162% alternate price projection of the wave 1, which happens to be just a few points from the 78.6% retracement of the advance off of the October low. So we want to be looking at that in the next couple, 3 days. The daily momentums are dual, they're really triple look back, deep oversold. No surprise there given this plunge of the last week. And usually by the fourth bar of being dual look back oversold, they make a reversal. In this case, it'd just be a daily low followed by 3 to 5 day wave 4 correction. We're probably going to make that daily low here within the next couple of days. Potentially, it's going to coincide with the Fed announcement on Wednesday, but keep in mind that would be temporary, more than likely at least, a wave 3 low. We'd have a 3 or 4 or 5 day probable, at least, wave 4 correction, and we'd be able to identify the specific targets for that and the maximum that it should be. If it's a wave 4 correction, we'll be able to do that once the daily low is signaled that it's complete. But this is really exciting because we still got probably a little bit of time, maybe even a couple of weeks net bearish. But keep in mind, this is just the first section down, more than likely at least, of a longer term bear trend that's just now getting underway and probably has several months to go. Of course, we do our big picture reports for DTE Report subscribers, and that gives the probable minimum time and price for like bear trends, major corrections. So if you're interested in keeping up to date in the stock markets, check out our DTE reports. Now let me show you one more thing, and it's really important also, and it's in the Nasdaq. So this is the Nasdaq weekly data. It's the cash index coming up from the March 2020 low, the last very significant low. We had about a 30% decline into that low from the high just a few months before in February, a few weeks before in February for that matter. So since this significant low, and this is where this bull trend began from, is as of the end of last week, the Nasdaq has declined greater in price range than any correction since the March 2020 low. Now that's called a price overbalance, and it's really significant because not only has the Nasdaq had a price overbalance, that's a term from W.D. Gann, but it has come down and it has closed below the closing lows on the weekly data from back in October. As we can see here, this is the weekly closing data. And again, first time the Nasdaq has closed below a prior weekly swing low close since the March 20th low. It's an overbalance of price. We've had 17, I think the largest decline here was 1,761 points. Doesn't look that great here, and that's just because of the incredible bull market that's been going on. But it was down 1,761 points, and that was the largest decline since the March low. And as of just this past week, the decline's been 2289, so significantly more in price range. It's just a little bit short of percentage change, and that'll be the final nail in the coffin, is a decline below 14,390. That's 100% of the percentage change of 14.16% off of this high. But it's already given the decline and the closes below the weekly closes here and the overbalance in price. This indicates that a higher time frame correction, if not a bear trend, has begun, higher time frame than any of the corrections within the advance from the March low. That means, and this is really important for the longer term, that more than likely, at least everything's probabilities, that the stock indexes, including the Nasdaq, are going to make at least a correction to the entire advance from the March 2020 low. And typically, the minimum price target for a correction against a trend like that would be a 50% retracement. That's the probable minimum, by the way, and that's down to around 11,768. So more than likely, we've seen from the pattern position of the ES that the higher time frame trend is reversed. We've seen the Nasdaq is showing us that we're making a higher degree correction, if not a bear trend, since the March 2020 low, and that it ought to reach at least a 50% retracement. So this is really significant. It always also shows us that the stock indexes are just in the very initial stages of what should be a multi-month net bear trend. So our objective in the days and weeks ahead are going to be to identify corrections against a bear trend to position on the short side. So it depends on your time frame of trading or investing what you want to do. But my suggestion is just keep in mind that stock indexes are probably going to be sideways to down for several months. Possibly we've hit the high for the year. I think that's really a high probability case. And the indexes, including NASDAQ, S&P, and the others, will make at least a 50% correction from the low in 2020, if not more. And we'll address the potentials for a higher time frame correction or bear trend at another time. That's it for today. So I hope you enjoyed this. You learned something from it. Remember, whatever you learn in these videos, whether you trade the markets we talk about or not, is you can apply it to any market in any time frame. So I hope you'll be back next week. And remember, click on the link, register for our free DT News membership, where you can receive more alerts and practical trade education. And of course, subscribe to our channel here to be notified when our weekly YouTube updates are posted. I hope you have a fantastic week. Take care. Keep healthy. Be back with you next week.